How do property taxes and escrow accounts work for first-time buyers? Imagine buying your first home and feeling confident about every step. One area many new homeowners overlook is how property taxes and escrow accounts work. It can seem confusing at first, but understanding these parts of homeownership is key to avoiding surprises. Property taxes are local taxes based on how much your home is worth. Local governments use this money to pay for schools, police, fire services, and other community needs. The amount you pay depends on your home's assessed value and the local tax rate. Usually, property taxes are about 1 to 2% of your home's value each year, but this varies depending on where you live. When you get a mortgage from a lender, they often set up an escrow account. Think of it as a savings account managed by your lender. Every month, a part of your mortgage payment goes into this account. The money is then used to pay your property taxes and homeowners insurance when they are due. This way, you do not have to worry about paying large bills all at once. It also helps keep your payments consistent and on schedule. For first-time buyers, it is important to know that your mortgage lender will tell you how much to put into the escrow account each month. The amount covers your estimated annual property taxes and insurance premiums divided into 12 payments. When taxes are due, usually once or twice a year, the lender uses the escrow funds to pay them directly. You can usually find out how much your property taxes will be by talking to the local tax assessor or your real estate agent early in the buying process. It is also helpful to ask your lender if they requiring an escrow account and how much they will collect each month. From a tax perspective, homeowners can deduct the property taxes they pay on their primary residence when filing federal income taxes. However, the total deduction for state and local taxes, including property taxes, is limited to $10,000 per year. Keep good records of all property tax payments, whether paid directly or through your escrow account, because you will need these when filing taxes. At closing, property taxes are usually prorated. This means the seller pays for the part of the year they own the home, and the buyer pays for the rest. So, you only pay property taxes for the time you own the house during that year. To stay on top of everything, contact your local tax assessor early to estimate your property tax costs. Understand whether your lender requires an escrow account and how much will be collected each month. Keep all receipts and records of your property tax payments for your taxes. Knowing how property taxes and escrow accounts work helps you plan your budget and avoid surprises, making your journey into homeownership smoother and more confident.